The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 1st. How about that, folks? April Fool's Day. Wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows each of us should always be pioneers of our future versus prisoners of our past. Hope each and every one of you had a great Tuesday out there. Let's make sure that you and I do everything we can to have a wonderful Wednesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. You see, when you and I, when we can make that one little 2x4 shift, it means that we can find the gift in every set of circumstances that life is going to go ahead and throw at us. And that's the rule of that's the law of the universe. It's got to test us, just like these markets test the bulls and the bears each and every day, and that means you got to find the gift in those circumstances. We're going to go ahead and we're going to do that here all morning long, at least for the next couple of hours. Of course, most importantly, I want you to know that I'm grateful for your presence here, and I'm here to serve you. So feel free to dial on up at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. That way, you and I, we can go on a safari. We can go looking for bulls and bears out there. This is April Fool's Day. Wonderful Wednesday. Of course, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures up 45 points, trading out at 17,657. S&P futures off about 6 points at 2,055. NASDAQ off 8 at 43.21. Russell 2000 down 4. King dollar, U.S. dollar index back 216 ticks, trading out at 98.44. Goldilocks up $8 right now, trading at 11.91. Silver up 5 pennies at 16.65. Light sweet crude up 12 pennies. A quick peek across the globe out here. Maybe not so quick, but a peek across the globe anyways. Over in Europe right now, we've got green arrows. Hey, I thought we handed off a bad market to Asia last night. Well, Asia was a mixed bag. You had the Shanghai up 65 points, 1 3/10% out there. The Hang Seng up 180 points. That was up nearly 0.7%. The Nikkei struggled a tad, but right now over in Germany, up 70 points. The FTSE up 50. Well, what's it mean, that FTSE? Yesterday we were taking a look at the taking a look at these levels out here, and there's really two horizontal lines going across my screen out here. 69.50 is one of them. That's really the long term. That's the consolidation breakout above the 1999 level out there. We know that the FTSE had gotten above that area. This is a daily chart. Let me switch to the weekly chart. I'll leave it here on the daily chart as we speak right now. We know that the week had closed below that level. And that says at this stage here, the only way that we can take a look at it is it was a false breakout. Now, it's not as if the FTSE here has broken down. In fact, if we just simply take a look at retracements, we look at retracements. There's three levels of retracements that I like to use. Those three levels are 0.382, 0.618, 0.786. So those are the three retracement levels. I like to use two expansion levels, 1.272, 1.618. Just use those numbers just to keep things simple. Now, what has the FTSE done? The FTSE came right back to the 0.786 retracement level. Really stopped right on that number, which is 67.73. It did that yesterday. We haven't seen a bullish reversal or anything. We have not seen any follow through to the downside. We have not even seen a test of the swing point low out here. Don't know if we'll get it, but that swing point inside the FTSE is March the 11th. Look, the real key area to be watching inside the FTSE, two levels. 68.75 is the first one. That is your 2007 high. 69.51 in essence is your 1999 high. Anytime the FTSE gets above that, it's telling us that it is trying to break out and from a large consolidation standpoint, move much, much higher over the longer term. That's the message of the FTSE. With regard to the DAX, up 70 points right now. The DAX has just simply been working up an overbought condition. It's been doing that by moving sideways after making the 1 to 1.618 A to B equals CD to the upside. The DAX is doing nothing more than just simply charging its batteries to make its next move. Its next move will take you up to the 12,695 area, and that is what the DAX is doing. This bodes well. Both these bode well for the U.S. markets. Why do they bode well? Just simply because of the simple correlations that we have. Let's see how quickly I can find this. I should have just had it up on my screen. There it is. It is right. How about that? That's not too bad. That only took about 5-10 seconds out here. If you take a look at the DAX, we can see the directional correlation. We've got the DAX at the top, the FTSE in the center, the S&P at the bottom. We can see the directional correlation between these markets. Is it always glued together, side by side? No, but is it a really good gauge as to what's going on? It is. Does that mean that it's really more of like a one world market out here? And that's why we take a look at currencies, because that's what moves the markets out here. The answer is yes. Has the DAX fallen apart? Not even close. It's trading up towards its highs. Has the FTSE fallen apart? No, the FTSE, just like anything, anytime you get to anytime you take on the next plateau in life, you're typically going to stumble. You know what I mean? It's kind of like the 4-minute mile. It's like Roger Bannister out there. I mean, come on, folks. Thousands of years, literally thousands of years, nobody could break the 4-minute mile. Every runner out there was trying to break that 4-minute mile. The day that Roger Bannister broke the 4-minute mile, he was contemplating not even running. He was kind of dismayed at the number of attempts that he had out there and simply failed. And when the wind seemed to be in his face, yeah, he had a headwind out there, he decided, I don't think I'm going to do it. And I don't know what the reason is. I haven't been able to find out the reason. What he did do was he went ahead and ran that race. Now, he had run that race in his mind time and time again. And the secret to him breaking the 4-minute mile, I know what that is. The secret was he saw himself doing it before he actually did it. Think about that, folks. Think about that success formula. Think about if you watch golfers out there, they're doing that all of the time. We need to, you need to, each of us should always see ourselves breaking through that plateau before it actually gets done. Hey, guess what? As soon as he broke it, that record didn't stand for long. It didn't take long. See, once somebody saw him break the 4-minute mile, break that plateau, break that barrier, then all of a sudden people believe that they also could do it. And that's all that it takes. So now with regard to the FTSE, it's just simply trying to break that plateau, those levels that we looked at. And when it does that, traders around the world, they're, because when it comes to technical analysis, there's only so many patterns that are out there. And so when you see that take place, please, by all means, folks, recognize that that's like breaking the 4-minute barrier out there. And that is a bullish move until we get any other signals. So if we take a look at these markets, has the FTSE fallen apart? Absolutely, positively not. Has the S&P fallen apart? Come on, goodness gracious. No, it has not. It's really been doing what it's supposed to be doing, which is just kind of a bunch of head fakes out here. And that's all that's really going on inside these markets. These markets are going to go ahead and they're going to power through. They're going to move higher. The FTSE is going to go ahead and overtake that hurdle out there. They're going to get, FTSE is going to go ahead and get above that level. Now, look, I know that I'm one of the few out here that simply has this belief, has this view on the markets out there. It is what I say. It is what I say. It's not what I say. It is what I see. And you really don't want me showing up here and giving you a call on the markets without conviction, do you? I mean, what fun is that? So that's why we have bulls and bears. That's why we have two people look at a market. That's why we have somebody who's going to sell a stock and that next person is going to buy it. Because one believes the move is over and the other believes the move is just beginning out there. And that's the way that these markets work. Now, if we go take a look at what went on in Asia last night, why do we do this? Why do we do this in the morning? Because it's so important to understand where we came from. Hey, futures traded lower last night. We saw nice bounces, nice moves inside of the market. Is the move to the downside over? I can't say for certain whether it is. I know there's certain things that will go ahead or that I'm taking a look at and monitoring during the day out here. I can't tell you whether it seems like the low was last Thursday. Until that low gets taken out, that was the low of this move out here. If we take a look at the Shanghai, here is the daily chart out here. Strong like bull with regard to its run. It's up above resistance out here at that 36.55 level. She wants to, or he wants to, however you want to take a look at it. That wants to make its next move up to the 46.42 area. That's what's going on inside of that index. If we go ahead and we take a look at the Hang Seng out here, up 181 points last night. What the Hang Seng is doing, it's trading above a very key level, this 24,988. I believe I've got to put this on a weekly chart in order for it to really show up. And that's a swing point that takes you all the way back into November of 2010. There's breakouts going all over the place. It's only a matter of time, and it might be today, that the S&P decides to go ahead and join along in the party. It did get an invitation. I just haven't gotten the RSVP just yet. We'll be right back, folks. Oh, I think I'm on the wrong clock. Son of a gun. How did I do that? Let me change over here. Hey, I got 3 minutes left. Hey, see, that was a head fake out there. Pretty funny out there. You know, we all have different clocks out here, so how about that? That was too funny. Hey, April Fools. I wasn't sure what I was going to actually be able to do for April Fools, but gosh darn, if that Tom O'Brien didn't play an April Fools joke on me. I had it set to his clock for the 3 to 5 hour out there. Okay, so back to the Hang Seng. We take a look at the Hang Seng up above a key level of resistance at 24,988. 24,988 may, in fact, become the new support level. And that says that the Hang Seng moves up to 27,200. That is its next target line out there. Okay, so we take a look at the world markets. Let's go take a look at our futures contracts. Let's go see what they've done. Hey, let's start off and take a look at the Dow. What do we know about the Dow? Number one, with regard to the lows of last week, of last Thursday, inside the Dow futures, none other than your favorite single candle, and that is the hammer. The hammer is down until that low is taken out. That low, by the way, is 17,465. So far, that low has held. What else? We've got bulls all over the place when we take a look at these bottoms out here, these most recent bottoms, the lows out here from March 11th. Come on, get that arrow going, not the arrow, but that line going across my screen. Look at how important that level of support is. Look, the role of bulls and bears is to do nothing other than to paint candles for you and I. That's its role. That's the way the market communicates to you and I. And what we know out here is this area, 17,545. Yeah, it's been, the sellers have tried to tackle this area. But guess what? Just absolute failures. Miserable failures. That's their plateau in life. What are the bears trying to do? They're trying to close below that. They're really trying to close below the low of that hammer candle from Thursday out here, 17,465. Look, if they do that, if they're successful, they are able to close below that. I can't tell you how the battle is going to end up here. The battle of the bulge, so to speak. What I can tell you is that would set up an A to B equals CD to the downside out here. And that A to B equals CD to the downside inside the Dow futures. It doesn't take you too much lower than through that candle session. In fact, it's already made the one-to-one out there. The next level would be down around 17,308. That looks like probably by about 0.618 retracement. That, quite frankly, would set up another Gartley buy pattern. It actually took place on Thursday. The actual Gartley buy pattern, now that we look at it, because all that H.M. Gartley required was an A to B equals CD down pattern. Hey, how about that? They're playing that music in my ears so loud just to let me know that this is really the time to sign off. To sign off just for the next few minutes. This is Steve Rhodes. This is TFNN. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. S&P futures off 4, NASDAQ down 6. Let's take a look at the daily contract here for the S&P futures. What do we know? Number one, the same kind of setup. Now, it didn't form a hammer candle. Really close. Really close. No cigar, but so close on March the 26th out there. What we do know is that trading session was just simply pushing into the support of that nice little Morningstar reversal signal, three-river Morningstar. That was at the price point of 2030.50. That's the level of support. We had this little four-river Morningstar. Really, it's a three-river. It just took 4 trading sessions to occur. And that says that the low of that March 26th is also support. We've seen prices bounce off of the market profile low area. That is also down in that area. So it's a real key level of support. Now, that's important for both the bullish side and the bearish side. Whenever we take a look at a trade, no matter what, we've got to take a look at both sides of the trade. You know, this is nothing more than us watching the battle unfold between us, between us sometimes, and also just simply between the buyers and the sellers out here. What do we know? We know that the sellers have not been able to overtake the position, the defensible position of the buyers. If they do, what does that mean? Well, you just simply go back and take a look at retracement levels. That becomes the next area as far as where the next flank is, where the next line of support is. And inside the ES Mini, that would be at the 2020. You'd have 2020 vision out there. That would become your next level of support if, in fact, the sellers are able to push through that 2030 level out there. And that's what's going on inside that market. Let's go take a look at, so that we got a pretty decent, well, let's go take a look at the NASDAQ as well, right? Let's go take a look at the NASDAQ. What do we know about the NASDAQ out here? Well, look, the NASDAQ actually formed a hammer candle as well. Let me just expand this up a bit. So the candle session on the March 26th, you see a very small wick. You see the ES Mini had a little bit too much of a wick out there. You get too much of a wick, you can't be called a hammer candle. But in the case of the NASDAQ, it's really clear, very small. That sets up a hammer candle out there. That says that that's an important low, excuse me. That low, by the way, 42.70. Hey, last night, overnight action, that level was tested. We saw price get down to 42.59. Thus far, it has been rejected out there. So we know that the markets have not been able to, as Tom likes to say, bust them down. If you can't bust them down, what do? You go ahead and you try to bust them to the upside out there. And that's likely what the outcome of the markets is today. Why would that be the case? Hey, yesterday I suggested that it was going to be difficult for the markets to really break through that negative barrier because they really didn't have the currency pair at its back. What currency pair was that? The only currency pair that we need to follow to be able to understand what our U.S. stock indices are really doing, and that is the Euro Japanese yen. A little different story here this morning. Not a big different story, just a little different story here. We're seeing the Euro Japanese yen trade slightly higher. Now, it's mostly been in a sideways move, sideways to higher. We've just simply seen a little bit of retracement. But our ability for the markets to trade higher today, at least with regard to this currency pair, it doesn't have a headwind at it, so it doesn't have that plateau that it needs to deal with. So you've got all these signals here that are saying that the markets want to go ahead, and that would be over the course of not just the next couple of days, folks. We're not talking about something that just lasts through tomorrow, which, by the way, the end of tomorrow, we won't be with you on Friday because the markets will be closed out there. But the markets want to make, where I believe they already have, which was last Thursday, made that significant bottom, that next significant bottom out here. It's only a matter of time before the winds change, and they just simply, take it up higher. How much higher? I don't know. We've got certainly long-term targets that we take a look at, and we'll take a look at those during the next hour and a half or so. But the Euro-Japanese yen, that is moving higher out here just slightly. If we take a look at the euro, what has the euro done at this stage? The euro so far has made that 0.618 retracement. And that's the retracement off of the low out here from March the 16th, this euro versus the U.S. dollar, up to the high on March 26th. They haven't made it exactly, but they've gotten pretty darn close. That exact number would have been 1.0685. The actual low intra-session yesterday, or yesterday itself, was 1.0713 out there. So the euro may have already formed the B to the C leg, and therefore the A to B equals C to the upside. What would that look like if, in fact, that is the case out here? Well, your A point is the low from March 16th, your B point is the high from March 26th, and your C point, yesterday's low. And if we take a look at what that would give us a price projection somewhere around 1.1306, maybe even 1.1467, and that's what's going on inside of that currency pair. Let's go round this out. Let's go take a look at the Great British Pound out here. Great British Pound has been struggling as of late, but has just really terrific support at the March 18th low out here. That low, by the way, is 1.4635. Hey, when we get back, let's go see how these markets are going to drop, whether they're going to pop. We'll take a look at commodities like gold, silver, light sweet crude, and anything else you'd like. Just give us a call. 877-927-6665. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Races. We got the Dow up, down 15 points, right now to 17,758. The S&P's off 2 at 2,065. Composite off a couple points at 48.97. Gold up $11. And speaking of gold, let's go to John in Epic, New Hampshire, I believe. John, thanks for calling. Thanks for holding. How are you?
Oh, great, Steve. How you doing? Thanks for taking my call.
No problem. So now what can you tell me about? Is it Epic, New Hampshire? Is that where you live?
Oh, it was actually Epping.
Oh, okay. Are you a native of that area?
Well, no, actually, I grew up in Massachusetts, and I moved up here a couple of years ago. My company moved, so I went with them.
Okay, how do you like that area?
Oh, it's nice. There's pluses and minuses in relation to Mass. I grew up in Mass, lived there all my life. But New Hampshire is a little bit easier going, less taxes.
Okay, that's good. That's positive. That's good. Hey, how can I help you with gold? You said it looks like you had a question on gold and maybe the trading platform or the charting platform that I'm using. How can I help you?
Yeah, well, actually, my primary question is, if for a person day trading, do you have any recommendations for a software and platform to use? I'm currently using Ameritrade, the old platform strategy desk, and I like that more than the Thinkorswim because it has much higher levels of flexibility. Than I can have multiple screens open and I can see the charts easier. But it's so old. I think they're having lots of problems with it. And
Yeah,
I'm looking at other platforms. I'm trying to understand what recommendations you might have.
I would have to say it really depends on the tools. So it depends on what it is that you're using to base your decisions on. And then it's just a matter of using whatever platform it is that provides you with that information. I think it is, I'd be kind of agnostic as to what that is. If it's a technical pattern that you trade, for example, if it was the lightning bolt pattern, the A to B equals CD pattern, you were trading that on an intraday basis, you'd want to have a set of tools that would allow you to do that.
Yeah, well, I think I do use standard sets of tools, so I think most platforms would allow me access to those tools, and I do use patterns. But I use multiple charts, and probably like at least 10 charts I'll have open at the same time, and I need to see them all at the same time.
Sure. No, absolutely. Now, as far as most of the charting applications allow you to do that. Now, I don't use Thinkorswim, not for any reason other than just the mere fact that, how many trading platforms can you actually go ahead and learn? But I would say that I can tell you with inside the two that the two that I show, and I used to use Instant Windows all the time. But the two that I show, eSignal, you can have as many charts open as you want. With regard to NinjaTrader, you can the same thing. But I utilize those two platforms because, and I trade using the NinjaTrader platform because it hooks directly into my brokerage accounts, and also because I can easily screen trade. So, that way, in every order that gets placed, it's one cancels the other. So it's got both sides of the trade, easily marked at the time that the trade is put on, or, whether it's live or whether I'm just waiting for a bid, waiting for a fill. So,
okay. So you do use NinjaTrader then, right? That's interesting.
I do. Yeah, no, I do, but I have used that platform for a long, long time. So the tools inside the now that's because it hooks directly into the brokerage account. It's it works for me. As I say, I can be trading. That my trades are visible on my screen. If I want to go ahead and make an adjustment to the stop, I just have to pull and drag. I think you've got the same type of thing inside of. I'm sure you do inside of Thinkorswim. I don't know. I used the Ameritrade system a long, long time ago, so I can't tell you. But here's what I would say: if it works for you, you just got to stick with it.
Okay. Well, I do appreciate your input there.
Yeah, no problem.
I guess if I'm still here, if you have another minute, I'll talk to you about the market.
You've got 11. How about that?
Great. Hey, so where do you think this market's going? I'm actually at work, and I haven't had time to listen. So it looks like it might be topping out here, and maybe have a pullback or a little. I don't know if we go as far as a correction, but.
Yeah, the Dow's off 112 points as we speak right now. The S&P is down 11. I still am of the belief that the market is doing nothing more than trying to create this next bottom, which either occurred on last Thursday, unless that low gets taken out, and then the market takes off to the upside through May. So nothing has changed in my viewpoint there. If the last Thursday's lows get taken out, then I'll start taking a look to see, if there's any other indications that outlook is wrong. So that's my outlook on that, on the overall markets out there.
All right. Well, I thank you for your time. I appreciate it.
Okay, no problem. Thanks so much for calling. Thanks so much and have a great holiday weekend out here.
Thank you. Bye-bye.
All righty. That was John in New Hampshire. So the Dow's off 120 right now. The S&P is 12. I mentioned that we would go take a look at commodities. So let's do that. Then we'll circle back around to the indices and see what's going on out here. If we take a look at gold right now, you've got gold's up 13 bucks. That's trading out at 11.96. Now, in the case of gold, let me do this. Let's put this on my screen out here. And in the case of gold, here's what we know. If we go from the low to the high, the low being the trading session of March 17th to the high out here on March 26th, you know, the retracement didn't make it down to the 0.618 level. 0.618 would have taken it 11.72. Never got down there. What it did get down to is that TAS market profile low, and that's at the 11.77 area. So you've got a nice little bullish reversal signal going here today. I do not know how gold closes. I would say here that if the number that I was using is a little bit lower than this, but the number I was using, well, let me just switch over here. I'm going to take a look at that number. You're getting real close to the number that I'm looking for gold to close above to give me a bullish confirmation out here. What gold actually did do, I'm glad I pulled up this chart, is gold came back and it tested the top of the March 7th, November 7th swing point. The top of that was 11.79. So yesterday, gold pulled back, tested that, rejected that. Now you're getting a bullish reversal signal as we speak right now. But gold really needs to close today above 11.98. Now, I will say that was a number I was taking a look at. Instead, I'm going to change that view and say, you know what, I'd like to see 11.98 versus 12.08. Hey, a $10 move out there. You'd like to actually see gold go ahead and close above 12.08, that TAS market profile. Now, what's interesting here is right now what gold is doing is trading back inside that March 26 swing point, the low of which is 11.94. If you close inside there, what that says is that the high ought to be tested, and that is the 12.20 level. And that 12.20 level, you know, volume's fairly decent out there on that day, but there was a nice volume spike on a 10-minute chart, a half-an-hour chart out there that says that high should get tested. So at this stage here, any close above that 11.99, that says to me we ought to see a run in gold at least up to the 12.20, and it's very possible that gold would be or has formed the C point of the A to B equals CD. Now, if in fact that is the case out here, the A point being down on March 17th, the B point being the high on March 26th, your C point being down here March 31st, your 1-to-1 A to B equals CD takes you up to 12.56. That would become your next price target. Of course, gold has to break above 12.20, and that is what's going on inside of gold. If we take a look at what's going on inside silver, silver's up 18 pennies right now, trade out at 16.77. If we take a look at that, silver has only made the 0.382 retracement. Now, in the case of silver, it's A to B equals CD pattern. If, in fact, both these metals have found a bottom, it's a doozy out here because in the case of silver, it only made a 0.382 retracement. And that says to me that silver will blow through not just 1741, its swing point, not just 1858, its 1-to-1 A to B equals CD, but what it will do is it will go ahead and it'll target 1916. That is your 1-to-1.272 A to B equals CD to the upside. So we'll see how it closes. If gold fails to close above that 11.99 area, then there's just simply more work in forming the bottom that it, in fact, is trying to do. Okay, so now let's go back. Let's take a look at the indices out here. You've got let's start with the S&P. The S&P is trading at 2,053. Actually, let me do this out here. Let's go back to the long-term charts. This is the weekly chart inside the S&P 500. What do we know? We know that the S&P 500 is broken above that 2,042 level. 2042 is the bottom of its horizontal trading range boundary line. That is support until you see the S&P close below 2042. And I'm not talking 2041.50. I'm talking close well into that 2040. This is a weekly chart, so it would mean that really this would have to take place tomorrow. All that the S&P is doing is churning and churning and churning and trying to find a bottom. Short of doing that, then what you're looking at is the S&P making a run to that 2198 level. That's the top of its horizontal trading range boundary line. Now, as I say, we always must look at both sides of the trade. Let's say that Stevie is wrong in his outlook with regard to what the markets are doing here. Well, then what you're looking at is you're looking at a move down to the trend line. Now, that's a really strong trend line. That's the trend line that has been in place and has not been broken since the October low in 2011. That is where our low found a bottom in October of 2014. So if you were to see any kind of significant close below 2042, then that becomes the level of support. When you break trend lines, what you always should be doing is then looking for the next trend line that is in place, because typically what a market will do is when it breaks one trend line, it will fall down to that next trend. The larger trends in place here for the S&P 500, both horizontally and diagonally, they are still in place. That's what's going on inside of the S&P 500. Let's go take a look at the Dow. It was off about 125 points or so out here. Let's go take a look at the Dow. Let's go look at its horizontal levels of support and see what it is doing out here. Well, inside the Dow, there's a long way down for it to get to its level of horizontal support, because that's all the way down at 17,172. Of course, we know that it's hurdle here in its 4-minute mile is at the 18,291 level. That's what it needs to get above. So it looks like right now the Dow, if I go turn on its midpoints, and oftentimes these midpoint areas act as, give me a moment here, where is it? There we go. Act as levels of support. Let me go ahead and add that back in. You'll see a little dashed line come across your screen out here. Okay, it's just slightly below that level, which is 17,732. Of course, do not forget, this is a weekly chart that we are taking a look at. Just easier to take a look at the longer-term picture out here. So any failure inside the S&P, getting below that level we looked at, I would say that the Dow would be on its way down to the 17,172 level. That's, in fact, if my prognostication is just simply wet out here. Let's take a look at the NASDAQ composite. Let's go take a look at it. Give me a moment. We'll pull that up. COMPQ. And then we go back and take a look at that daily charts and so forth. But if we take a look at the weekly chart here for the composite, she's just hanging right around its, or he, however you want to take a look at it, just hanging around its midpoint level of its horizontal trading range area. 48.80 is that number. You're at 48.63. Any significant failure of this level, its next level of support is 47.05. We know that the key level of resistance, its Roger Bannister 4-minute mile moment, is at the 5,055 level. That's what it must clear in order to move up and out. So that's what's going on inside the S&P, the Dow, and the NASDAQ composite. Let's go take a look at what's going on. What do we want to look at? Let's come back here to the market. So off 145 right now in the Dow. Volume, it's so early now with only 17 minutes in the trading session. I'm going to save that for the next hour, for hour 2. But volume, I can tell you, is the Qs are down with about 5 million, the IWM 3 million, the SPYs 19, the Diamonds with 1 million as we speak right now. What I want to do is take a look at some other things that are moving in the marketplace. Let's go take a look at Regeneron Pharmaceuticals, Biogen. So it's the IBB that is struggling out here. You've got Regeneron Pharmaceuticals. She's the leader dollar-wise to the downside, off 13 bucks right now, trading below its most recent swing point that was established here last Thursday, March 26th. That swing has 1.1 million shares. You've done 106,000 shares in only 18 minutes of trading out there. I can do the math. It sounds to me like that is a B point being taken out with volume. What does that set up when we take a look at A to B equals CD patterns out here? Well, inside the inside of Regeneron Pharmaceuticals, that would give you a price projection of about 410. I would say more likely 396. And 396 takes you back to this little base of bottoms that was formed out here. And that base basically began back in November of 2014 out here. It looks like that's where Regeneron Pharmaceuticals is headed to. Let's go take a look at Intercept Pharmaceuticals, ICPT. That is trading out right now at 272. It is just trading into that March 26 swing point. That was a 1.9 million shares. So far this morning, we've done 104,000 shares out here trading into that level. It should find support. It's been pulling back. Yesterday was a pullback into that level with light volume. Intercept Pharmaceuticals ought to find support at 252.94. What else is moving to the downside? You've got Biogen, BIIB. We'll have to take a look at that one when we get back from this next breakout here. Dow's off 162, S&P down 16. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. I got the Dow off 173 right now, trading at 17,603. The S&P at 2050. That's down 17 points. The composite off 50 points. Let's go take a look at where we began the show. We were taking a look at the daily chart for the futures, right? Because those were the ones that showed the bullish candles out here. So let's go take a look at the Dow futures. Let's clean this chart up just a tad. Make it a little bit easier for you to see out here. Let's go do that. Let's get rid of this. Can I get rid of it? Come on. Do that for me real quick. quickly here. Okay, so as we take a look at it, the key level here to be watching inside the Dow futures, again, is going to be this low from March 26th. And that low, which was a hammer candle, is 17,465. You need to see it close below 17,465 to really spell trouble in River City out here, because what you and I know is that when you close below a hammer candle, if you're long, you're wrong out there. At this stage, and it doesn't matter whether it gets tested, and the key is, does it reject that level? So 17,465 is going to be the key level inside of the Dow futures. If we take a look at the NASDAQ, because the NASDAQ also has got that hammer candle out here, let's go take a look at that low. That's going to be the low of the 26 out here. That low is at 42.70. Right now you're trading at 42.83. Doesn't matter whether you pierce or not. We know that there are significant levels of support here, bullish reversal signals, bullish candles. This is where they're hanging out. They're defending their territory. We'll see if, in fact, they can defend this level. But the key to be watching inside of the NASDAQ is going to be that 42.70 level. And those are really the two indices that have got the best candle signals with regard to, hey, if you close below them, there's some real trouble out there. If we go take a look at what's going on inside the New York Stock Exchange, really not that bad. It's off, let me see here, the NYSE is down 60 points. What do I mean, not that bad? Take a look at how strong this NYSE has been. Now, this is the wider swath of the market, okay? So this way we don't have to worry about 30 stocks. We don't have to worry about 500 stocks. We don't have to worry about 100 stocks. What is the New York Stock Exchange doing? It's trading right at its 0.618 retracement off of that last move all the way back here from March 11th. New York Stock Exchange is stronger than all of them. Stay tuned, folks. Tom O'Brien will be up with his Market Minute, and I'll be back to do the second hour of the Trader's Edge at about 8 after 10. Have a great day, folks.